So hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Friday morning, lots of cues to digest, lots of action expected in trade today, given the fact that Infosys and TCS both have kick-started the third quarter earnings season. While TCS was a beat, Infosys wasn't as bad as the street was fearing. So aside of that, global cues fairly muted, GIFT Nifty hinting at a muted start, and of course lots of stocks to digest as well in today's session. But if you have any stock related queries, we are here to help you out. If you send them to us on our YouTube feed, and we'll try and take them up with our experts on the show. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed as Street digests hotter than expected inflation data. The December CPI comes in slightly higher than expected, giving way to expectations that the Fed may delay interest rate cuts. All eyes now on the producer price index inflation that is due later tonight. Asian markets trade largely lower after the US inflation print. However, the Nikkei surges 2% to hit a fresh record high. In fact, the GIFT Nifty, if you look at that, that's hinting at a mildly positive start for the Indian market. Crude prices surge with the Brent heading towards the $79 per barrel mark after Iran seizes an oil tanker off the coast of Oman, raising the prospect of escalating conflict in the Middle East. Bitcoin, meanwhile, rallies to two-year high of $49,000, but cools off a bit as crypto ETFs make their debut on the street. TCS beats estimates in the third quarter with a dollar revenue growth of 1%. Margins also expand sequentially. Meanwhile, Infosys numbers are not as bad as was being expected, as dollar revenues decline lesser than estimates. The company tweaks FY24 guidance to 1.5% to 2% from 1 to 2.5% earlier. And in earnings today, of course, we will be watching out for Wipro. There could be some pressure on the margin front after wage hikes. Meanwhile, HCL Tech is likely to report the highest growth among peers with an expected sequential revenue growth of 4%. And also in focus will be Nykaa amid reports of a block deal by a foreign investor, and LIC after a tax demand of over 3,500 crore rupees. Well, let me first bring on board a technical expert for today. Joining me is Vaishali Parekh, who's the Vice President Technical Research at Prabhudas Lilladher. Great to have you on the show, Vaishali. I think this is the first show we are doing for the year with you. So wishing you a very happy new year. But if you look at the markets, we have been stuck in that 21,600 to 21,500 range, right? Given the fact that we did manage to defend that 21,600 mark yesterday, do you think that, we are going to edge higher from here? What are the levels you'll be watching out for, given the fact that, we have earnings to digest from the tech heavies?
Very good morning and a very happy new year to you as well. And thank you for having me on the show. So yes, market has been consolidating. So I would say we are very much well within the range of 21,430 as support. And we would now be looking at a resistance at 21,700, 750. So a decisive move above that would trigger a new round of buying. And now the way we are seeing the results season is begun. So let's see how we progress today, because Reliance has already taken the lead. So we need a follow-up buying coming from the banking stocks as well as the IT sector, because that is much awaited. So if that happens, then in all likelihood, we would be crossing 21,850, and that would bring us back on track to look for the further higher targets.
Right, of course, Reliance has taken the lead, and we need banking and IT stocks to fire up as well. But of course, IT will be the flavor of the day. We've had two major earnings coming in. Those industry leaders usually set the trend, right? So Wipro and HCL Tech reporting numbers today. But we are getting a lot of queries on our feed as to what one should be doing with the likes of Infosys and TCS post earnings. Infosys in the dying hours of trade saw a very sharp rebound, and we ended the day at the day's high for that particular stock, right? And TCS as well managed to cruise along in trade ahead of numbers. But today, post numbers, do you think that one should actually look at entering into these stocks at the current juncture? And if one is already holding these stocks, should one look at booking some bit of profits if we see an uptick?
Well, with a trading perspective, one should book profit, because I think, in my understanding, it should open a bit stronger. But for a longer term horizon, say Infosys per se, I'm looking at the stock and I feel it needs to sustain above 1565 levels to give us a clarity that yes, it's coming out of its consolidation range, and it's ready for a takeoff to higher targets. So, well, it's taken forever to, show us a trend. So now I am also holding on to these support levels. I think 1460 holds as a crucial support, and we need a trigger this stock moving above 1565 for us to look for a target of 1600 and higher. So that is how I would be looking at it. But of course, with a trading perspective, one needs to book profit if it opens very strong at the resistance of 1565. And likewise for TCS, TCS has already got into a momentum as compared to Infosys. But well, I would say that it would be having a resistance at around 3900 levels. So let's wait and watch. Too early to say.
All right, that's the view then. But Reliance, now that it has taken a lead, would you expect higher levels from here? What should the strategy be on Reliance industry from a trading perspective?
So Reliance, I think it's now aiming for a next target of 2750. That has been our trading resistance level. So, well, with a trading perspective, one should book profit because it has shown good momentum, but I think not in a hurry. But it can also go to 3000. But 2750 is the area to watch. Maybe with a trading perspective, one should book profit, and then let's have a relook.
All right. Lots of stocks will be in focus today. The likes of Nykaa, there's a block deal expected in this particular counter. Ahead of block deal, how should one really look at this? In fact, the block deal, if at all it will happen around market hours as well, market open only. But looking at the price action, Nykaa, it has been doing fairly well now. How should one really trade into this one?
So yes, now we see it has got into a trend, and now the new support level that comes to our chartical view is 175. So that would be the support level, and a breach of 195. That's what it did some days. I mean, day before yesterday, 195 was the high. So if we move past these levels, 195, 196, I think we would be looking at a target of 220 from here on. So view would be keep the support at 175, buy close to the support, and go for the target of 220.
All right, those are the levels to watch out for on Nykaa. But hold that thought, Vaishali. We'll come back and talk about specific stocks and take up viewer queries as well. But let me also bring on board, Aishvarya Dadheech of Fident Capital Management joining in for the first, in fact, to take stock of IT earnings. Great to have you on the show, Aishvarya. Yesterday, we saw IT earnings trickle in with the likes of TCS and Infosys. TCS has been a beat and Infosys as well, better than what the street was expecting, so to say. But, taking a look at both the numbers, which one would you prefer now?
Good morning, all the viewers. Nandita, I believe we started on a decent note regarding to the IT stocks which reported results yesterday. And we should not forget that, this quarter is normally the weakest quarter among all four. So the results was more to set the tone of, how things look like ahead rather than, what they actually report. But we were positively surprised the way, TCS reported results with almost 1% quarter dollar revenue growth. Obviously, when you go into details and you see there's been, one kind of a high amount of support from the BSNL business, which is India business, which led to this, some better results than what street was expecting. But when I look at both the numbers, I understand that possibly, both the beats were better than the street estimates, and it is imperative to say that we are possibly we are closest to the bottom of the issues that these IT companies are facing over the last 3-4 quarters. Now, things which really I got excited about was the way the margin trajectory improved. Both for TCS as well as the decline in Infosys was much more limited. We saw that there are many levers which has helped those margin. Obviously, there was a currency depreciation thing which was there. But in spite of wage hike, especially in the case of Infosys, the better subcontracting cost and possibly the improvement in utilization and lowering down of attrition has helped the margin for TCS as well as the Infosys. And we expect, if you look at the data about, the attrition over the last 4-5 quarters, and even in case of utilization, especially for Infosys, because improvement here to stay in quarters. Now, the only things left is how the growth looks. And both Infosys and TCS, it's looked like very similar. Clients are still very whatever deal wins that they have seen is more into optimizations rather than into transport. So that in similar to the digital spending part, it's not being a lot of traction in budgets and TCS deal with so far. Clients are not coming aggressively in that kind of an criteria. So it's important data point. The which we looked at both this company over the last 3-4 quarters, there is definitely a moderation, which indicates the kind of growth momentum or the positive sentiment for these companies. And the deal win looks very strong. Clients are not committed as of now. Expect that there would be a couple of orders of, I would say, not that kind of strong. But going ahead, it's a really opportune time for investors to increase their allocations to this kind of businesses. Last thing, one thing which the clients are doing right now is deferring of, a discretionary spend. So there will be a pent-up demand, possibly which will come upfront when they have a better clarity about the Fed outcome and the interest rate movement in US and also in EU. So possibly during the mid of next calendar year, we can see this discretionary spend start coming up as a pent-up demand. And the cost optimization deals are already a part of the whole process. So we believe growth in Infosys, TCS looks strong for the FY25 perspective. And believe I would say it's in a good time to go and increase allocation to this kind of companies.
All right, that's the view then. But, since we are running out of time here, just a quick word on what are you expecting from the likes of HCL Tech? Because, Street expects HCL Tech's revenues to be better than peers, right? Would you concur with that?
I believe today will be reporting their numbers and Street is expecting almost like 4% kind of a growth. We have to understand one thing that, as I spoke earlier, that it's more of cost optimization deals or which are, gaining the traction. And HCL Tech has a higher allocations toward, the IMS kind of businesses and product kind of businesses, and which are expected to do well. So it won't be surprising to see that momentum, continue and HCL Tech to report a very strong set of number today. I would be more interested to see how Wipro reports because Wipro has a very blended kind of an impact on their businesses. And if Wipro also possibly give a decent set of number, then it would be wiser to say that possibly this is a bottoming of the slowdown in IT which we were witnessing over many times, given such a weak, seasonally weak quarter. So that is what I believe that will set the trend for the coming quarters across the board. And just one more point, when TCS reports decent number and being a market leader, it basically set a trend for other companies as also. So I expect a lot of these mid caps and small cap IT companies to report good set of numbers in this quarter also. And there, see, we understand that they would need much lower revenue. So they won't need almost like 100 million, 50 million kind of a deal. And even if they get traction in digital spending, I believe that the traction in mid and small cap will begin earlier than compared to what large cap, which we will see in coming quarters. So I'm very interested to see how the mid and small cap report number in this quarterly season.
All right, mid-cap IT will be in focus this earnings season, given the fact that the leaders have kick-started earnings season on a better than expected note. With that, Aishwarya, that's all the time we have to discuss IT stocks. Thanks a lot for joining in this morning and sharing your insights with us. Always a pleasure chatting with you.
Thank you, Nandita.
All right, let me go back to Vaishali then. Vaishali, Polycab, that stock has been in focus over the last few sessions. Yesterday, we saw 21% kind of a drubbing on the stock. And today, we have a lot of queries trickling in on this particular stock as to how one should really navigate the kind of, drubbing that the stock has been witnessing. What would you advise if somebody who's holding on to Polycab, should they, look at booking losses or holding on? Or do you think this weakness is an opportunity to buy?
Well, actually, I'm seeing the long-term chart, the weekly chart, and I think it has corrected to quite an extent and pretty much close to its prominent support of 3,500. So as long as 3,400 level is intact, I don't think one needs to worry. because technically that would be a good buying opportunity to start accumulating this stock, because I think as far as the fundamentals are concerned, this company has been doing great. So because of these compliance and their internal issues, I think the stock has taken a beating. My view gets negated if we see a close below 3,400 levels. So till then, I would say wait and watch. Let us see whether these support levels are respected, and I would say start accumulating from here on in tranches.
All right, that's the view on a polycab. But what about a Borosil Renewables? We have a query coming in from Mohammad Imraj, wants to know your thoughts as to how should one really go about this particular counter. In the last 5 days, it has seen a decent 6% uptick. And in the last 6 months as well, equal, 6% kind of a gain coming in. Should one, hold on to this one as well if they have positions?
I would definitely think so, because I'm just seeing the weekly chart as well as the daily chart. It's just trying to get into the trend. So, of course, from a near-term perspective, I would say there is a resistance at around 505, and we've closed above that. So, I would say it is get a positive view, and I think one should hold on at least for a target of 550, and from there on, I won't be surprised if the stock goes further on towards 600 levels also. So for now, 550 would be the trading target.
All right, trading target of 550 there. Hope that answers your query. But MRPL, this stock was up 20% yesterday. And, in the last 6 months, it has gained 85% or thereabouts. 161 is the 52-week high, and it is at that exact level right now. Time to ride the momentum, breakout stock on the charts?
So, well, I'm seeing overall all charts of all periodicities is showing a lot of strength. Continue holding this stock with a trailing stop loss. Of course, not a right time to buy. No fresh entry recommended. But those who are holding should continue the rally with a trailing stop loss.
All right, this was a query coming in from KRK Rao. Hope that answers your query. The next one is coming in on a Coal India. Rakesh wants to know that the stock has been consolidating for the last 5 to 7 days. He holds 500 shares and is sitting on a profit of 40,000 rupees. He wants to know whether he should book some partial profits at the current juncture and enter at lower levels. Do you think that would be a prudent strategy?
So I would say actually there's nothing wrong with the trend. It is just consolidating. But on the safe side, keep a stop loss of 375. And if this stock moves above 390, 392, I think it's ready for a takeoff for a target of 420 to start with. So have a disciplined trading bias in this. 375 should be the stop loss.
All right, that's the view then. SAIL, that stock, there's a query on that stock from Pooja Mehta. Wants to know your thoughts in on this stock. Hasn't really fired up. Last 5 days or so, it has lost somewhere around 5% or thereabouts. The kind of gains we saw over the last 1 month seem to be fizzling out. Although it's not very far from its 52-week highs. Do you think now that the consolidation will continue in this particular stock?
So currently, well, we have seen the stock making a high of around 126 and now taking a support of a moving average. So I would say maybe if market shows us good strength for coming days, this too shall hold on to the support level of 112, and maybe we can see a new round of momentum setting in. For now, there is no damage to the trend, but having said that, 110 should be the stop loss to be maintained.
All right, 110 should be used as a stop loss for SAIL. Hope that answers your query. The next query is coming in from Nisha. She wants to know your thoughts on an Indigo. The stock is above that 3,000 rupee mark. And Nisha says that she holds Interglobe Aviation at 2,490 rupees per share. She's making a profit. Should she hold on to it, or do you think she should exit?
I think it's doing pretty well. We are looking for a target of 3,200 in this stock. Continue holding. I think this should give you further good returns.
All right, continue holding on to this particular stock. Hope that answers your question. 3,200 is kind of the kind of level that Vaishali is anticipating. Vaishali, there's a query coming in on Aarti Feeds. Do you track this stock? Any thoughts on what levels one should be watching out for on this one?
So yes, we saw a good run up yesterday. We saw exceptionally high volume, and Well, it has given a breakout even on the daily chart. So, 485 is the breakout level, 87 level. So, let the stock retrace a bit for an entry. I mean, I think maybe around 460, that should be the support for this stock now. And once we see a decisive close above 490 levels, I think this stock is ready for a next target of around 530. So, this is how I would trade this stock.
All right, that's about Avanti Feeds. But, I want to ask you your thoughts on a Tata consumer, Vaishali. There are news reports that the company may acquire Capital Foods, I beg your pardon, as well as Organic India. The stock has, at one point in time, a couple of weeks ago, the stock was doing well. But in the last 1 month as well, it has gained 18% or thereabouts, very close to the 52-week highs as well. Do you see more upside here, or do you think maybe it may take a break for a while?
It is consolidating right now. So I would say that those who are holding should continue holding with a stop loss of 1080 because the trend is intact. I think there is a scope of the stock going towards 1200 levels also. But for this, 1080 should be the trailing stop loss.
All right. One query coming in on an HDFC Bank. We of course have the numbers coming in next week. Varsha Gajjar wants to know what she should be doing with stocks like HDFC Bank and PNB. She already holds these stocks and she wants to know whether she should book losses or wait. HDFC Bank ahead of earnings, how should one position themselves?
So we never play results, as I said. But technically, I think there's nothing wrong with this stock. And if I were to say, I don't think HDFC Bank is a stock that one needs to trade. It is, the stock has got into momentum. It's getting into a trend. And right now, I would say that it's in the formation of a higher top, higher bottom formation. So I would say not in a hurry. We may see some knee-jerk reactions, if at all, with the result and all. But that would be a good buying opportunity. And I think this stock is ready for a target of 1740 to start with. And talking about PNB, it has given even a breakout even on the weekly chart, but we have seen a good run up. So having said that, in fair value, 86, 85 acts as a good support level. And once we see a cross of 97, 98, the stock is poised for a target of around 110 to start with. So this is how I would be looking at PNB.
What's the outlook on diagnostic stocks now, Vaishali? We have a query coming in on Naren Health. How should really one look at this entire space, the likes of Thyrocare, Naren Health, and the likes?
So Naren Health is getting into a trend. I think yesterday's candle was also very positive. I think it's ready to go towards a target of 1320. So I'm positive on Naren Health, and the other stock that we are tracking is Ipca Lab right now. So Ipca Lab also technically looks very well placed. It has shown good momentum since 2 days. And I think I have a positive view even on Ipca Lab for a target of 1160 to 1180 for now.
All right, Ram Kote had this query. Hope that answers your query. But couple of more queries. What about the railway pack stocks like IRFC, IRCTC? They have been doing, there is no stopping the rally here when it comes to the railway stocks. They have seen a lot of momentum, right? So what's the status here? Should one really ride it right now?
I would definitely agree, because since 2 days we are seeing good action coming in these stocks. So keep continuing holding these stocks with a trailing stop loss. In fact, there is one more stock which is to our liking, and that is Jupiter Wagon. Yesterday we saw good run up coming in, and all these stocks are showing a lot of strength. So I would say continue holding.
Continue holding. But if somebody wants to make a fresh entry, would you advise?
Well, not at this level. Wait for a dip.
All right, wait for a dip. That's the verdict when it comes to railway stocks. But I also want to get your thoughts on fertilizer stocks. Jeevan has written in, wants to know what to do with the GSFC. Would you trade into, in fact, would you look at any of these stocks now? National Fertilizer, GSFC and the likes.
So in fact, we have been recommending these stocks. Even GSFC, it's already got into a strong uptrend. So this particular stock, I would say buy with a support of 272. So this acts as a crucial support. And I think the way the fertilizer stocks are doing, I think this is ready for a target of 320 to start with. So we have a positive view on GSFC. And besides that, we have also recommended on our buys on National Fertilizers, Rashtriya Chemical Fertilizers. These are all good trending stocks. So look for the appropriate support levels to get into this stock.
All right, just one last query on SML Isuzu coming in from Juturu Pawan wants to know your thoughts on this particular stock, whether one should really look at entering now, or what are the levels that one should look at entering into this particular stock. The trend hasn't been there hasn't been any particular trend. In fact, it has been pretty range bound over the last 1 month. What are the levels one should look at entering into this stock, Vaishali?
So I'm looking at monthly chart, weekly chart. I mean, of course, it's doing very well. And on a daily chart, yes, as you rightly said, it is consolidating. So I would say there is a long consolidation happening between 1280 to 1360 levels. So I would say accumulate the stock with a stop loss below 1280. And let's wait for a confirmation, because once it goes about 1390, it brings in further conviction for a further strength, and we would look at a target of 1450 to 1500 to start with. So I would say 1280, 1270 as a strong support band. View gets negated if the stock falls below that.
All right, those are the levels to watch out for on this one. But with that, we're completely timed out. So we're done with the query segment here. But Vaishali, what would you be recommending for our viewers this morning?
So, well, I'm looking at, in the mid-cap category, I'm looking at KRBL. Yesterday, we saw during the latter part of the day, there was some momentum picking up, and technically also very well placed. So KRBL would be my recommendation with a stop loss of 365. It's currently at 382. I would be looking at a positional trading target at around 410 to 450. So this is one of the stocks. And the other stock that comes to my mind is Automobile. Yesterday, after a very, very long consolidation, we saw good volume, good chartical pattern, good candle formation. So if we see a follow-up buying, it gave a good close at around 117. So now I would say 108 acts as a stop loss, and I would be looking at a target of around 125 to 127 from here on. So this is another stock to my liking currently.
All right, those were the stocks, stock recommendations coming in from Vaishali. With that, Vaishali, as usual, thanks a lot for taking out time and joining in this morning. Always a pleasure interacting with you, and thanks a lot for addressing all our viewer queries with so much patience as well.
Thank you, Nandita. Have a good.
Well, all right, with that, we've come to the end of this edition of Morning Trade. But of course, from me and the entire team, thanks a lot for tuning in. You guys stay tuned, because coming up next is Opening Bell.